Hi, my name is Mark Scanlon and I'm the Chief Executive of Personal Group. We are an employee services business and we design programs for some of the largest employers in the UK. The main purpose of our business is to help our customers attract and retain employees. And to that end, we design programs which have different elements to them, and we render all of those services and products through a digital app, which is a native app available on the employer's employee's telephone. We offer services like employee assistance programs, where a single phone call for a marital, financial, legal problem can be discussed with a professional over the telephone. If that's not sufficient, then you could have up to 6 individual consultations as well to help with that. That helps the employer to avoid stress in the workplace. It helps with mental well-being and allows people a chance to go and recover from situations that they find themselves in, which are pretty straightforward. Well, we also offer things like discounts. So if you go and use our discount schemes to a modicum, you don't need to be a complete ninja in how you do it, but if you use just the system that we offer, you can easily save £1,000 per annum if you shop in the same grocers, if you book your holidays through our systems, and some other high street spending will allow you to save that kind of money, which is significant to the customer base that we serve, where the average take-home pay is just over £27,000. We offer salary sacrifice products like Cycle to Work, childcare vouchers, technology where you can buy from your gross salary and save your national insurance contributions, which makes it more economic, spread the cost over 36 months with a fully insured technological product. We'll do things like digital payslips, so we can render payslips to your telephone to save postage and stamps and all the difficulty of sending things through the mail. So our systems are entirely tolerant of machine-to-machine interrogation of our customer systems, and then taking the information out to be able to render as PDFs on the handset so an employee can see their pay each month or week or whichever cycle they're on. We also have a core insurance business, which is the origins of the company back since 1984, where we offer unique insurance products. And the business is further, even more unique in the fact that it sells the products face-to-face. So our insurance products are sold by our employees to individuals. So if you're a policyholder, you've actually met us. It's not possible to buy the insurance products on the telephone, on the internet, or on the app. It's entirely at a time that when we come along to your workplace and we go and sit down and discuss it with you. And typically in that situation, we'll show you the full gambit of all of the products that we offer on the computer, on the iPad. And in that situation, then you're allowed to talk about the insurance product, and if a customer wants it, then we'll offer the insurance product as well. So a very bespoke, tailored proposition into the marketplace for the insurance product, but also helps the employer to have its message proliferated across its entire employee base. And we will meet everybody if they will meet us. And last year, as a company, we saw 165,000 people. We sat down and presented to 90,000 people. And of that, about half, 45,000, chose our insurance products. And there are other products besides that in the system as well. We've got reward and recognition. We've got systems for booking your holidays, booking your rosters. There's room on there to go put information around your core benefits, perhaps information on your pension scheme or on your paternity leave or something like that. There's room for messages from the HR director or from the employer chief executive. And of course, because it's a native app, you've got push notification as well. So you can send information to employees. And bear in mind, a lot of the employees that we serve don't drive a desk. They haven't got a company computer or indeed a company email. So really the only way to reach a worker in a warehouse or driving a truck, for instance, is through an app. And that's technology that's evolved over the last number of years, I think, as we all know, and the ability to do that nowadays is so much more accessible to businesses like ourselves. We've taken full advantage of that technology and been able to do that. Our company originally really focused on large businesses, and that's businesses of over 5,000 employees, which is about a fifth of the market. We've since expanded that. So the parts of the market we look at is basically the entire market. But it breaks down to 3 areas. So we have large employers, which actually our definition today is 1,000 plus employees, and that's what we call large. We have SME, which is nearly 16 million people at work in the UK, which is another sector for us. And we treat public sector again as another discrete section of the employee base. And that's about 5.3, 5.6 million people. So we've developed our products, and particularly through digital, have begun to access all 3 areas. So our service available market, if you call it that, has moved from being 6 million people at work in the UK to 32 million people at work in the UK. And the very large growth potential area there for us is in SME, where nearly 16 million people work. And there we've been able to unlock that market by way of digital. So the development of our Happy app and our Happy platform, which allows us to do that, is the main entry process for us. And to do that, we decided to go and look for a channel partner, and that channel partner is Sage. So we signed a contract at the tail end of 2016 with Sage to begin to offer our products as part of their products. And that process started in earnest in June of 17, and that process now continues. So we're now beginning to offer our products into the SME market, and today we have over 10,000 licensees who are taking the Happy platform through Sage. And that will continue to grow as they roll that out across their customer base. Similarly, in public sector, through an acquisition we made 2 or 3 years ago called Let's Connect, we opened up our opportunity into the public sector. So we have a very large number of NHS customers, very large number of county councils that were already in that business. We had no overlap with the business that we had previously, and we've begun to develop that. So that part of the market is expanding for us, and we're now offering the services of the Let's Connect business we acquired into our large customer base that was existing, and now we're beginning to offer the full gambit of the Happy products into that NHS space, which is gaining momentum. So we are now established in all three parts of the market, which gains us access to 32 million people that work in the UK, which is basically everybody. And mostly that is a face-to-face connection, except an SME who is digital only for now, but it does offer the opportunity down the road to go and offer insurance products face-to-face to those people as well. So that's how our market breaks out, and that's how we've approached it. Yeah, there have been some changes to the salary sacrifice regime in the UK recently. I think the use of salary sacrifice became prolific, and the revenue ended up dealing with 10 times more P11Ds than they expected to have. Legislation actually says you can salary sacrifice a yacht. It became unmanageable, and they went out to the market to go and test through a consultation in August of 16 to see what changes they might make. Those changes came into statute in April 17. Which actually for the end user in our case make no difference, because there's a national insurance saving for the employee but no tax saving. There never was a tax saving, there still isn't a tax saving. But the changes that happened affected cars, childcare vouchers, cycle to work, the whole gambit of salary sacrifice products. That meant there was a hiatus and uncertainty about that. But I'm glad to say that became clear in April through legislation. We now know what that is, and all of our schemes are tolerant of that system. It's been tested by a number of the finance and accounting houses who are content with the treatment of the legislation as we do it, and that's begun. So that process now continues, and I'm glad to say the uncertainty and this clarity is behind us. Recently, we signed a deal with Sage. Sage have got an enormous footprint in the SME market. They've got a colossal number of customers that they've built up over a very long period of time, some 28 years in the case of the payroll business. So they pay through their systems over 2/3 of the population in the SME space every pay cycle, monthly or weekly. And that was attractive to us because they know the customers. At the same time, Sage are interested in iterating their product. There are new entrants coming into the market, which of course seek to compete with them. So they like to evolve their products and their services to be able to remain tolerant of a changing market. And having pitched our product to them, they quite liked what it is that we do. And of course, we do it all day, every day, and have done now for 33 years. So we know our business very, very well. But in the SME space, it's just not been present and not been available. So it piqued their interest, and we went through a process of getting to a signed contract last year, November of last year, so that's 2016. And have begun trading into the middle part of this year as they roll it out. And for Sage, it's an opportunity for them to offer more value. So they're very interested in promoting and helping small businesses to excel and go forward. Having an employee benefits package inside their offering is a really strong opportunity, because small businesses compete for labour from large businesses and vice versa. So actually, just because you're small doesn't mean you don't have the pressures of attraction and retention just like others. And there's only so much maybe a small business can do from a family-oriented perspective. If you're not offering those other benefits like the bigger businesses, you're going to lose out. So for them, it's a real point of differentiation in what they do, which is why they were so keen to work with us. And they have begun the process now of rolling that out into their customers. We're starting in the payroll division of the business, in a particular section of the payroll division of their business, but there are possibilities that we would build a standalone product, a Sage product that's not integrated but stands alone. And of course, we haven't even begun discussions around their accounting business, which is quite an enormous part of their overall business also. So that's the prognosis going forward. We enjoy a pretty strong relationship with Sage. We work together to develop the product. So the product they have is a derivation of our original Happy platform, and it's bespoke to them, and they influence the design of it together with us. And it probably has 80% of the essence of what's good about all of our systems is baked into the Sage product, which allows them to go and compete and to offer that to their customers and their customers' employees. Our insurance business is a very robust business. It is the origins of the company, and it's quite unusual in the way that we sell it. So to sell it, we actually meet people, we sit down and we speak to them, and we'll take 10 minutes, 15 minutes, a half an hour if we can to talk about the platform and all the different variations that are within it, but also then to talk about our insurance product. And it's a product that's stood the test of time. It's a very simple product to understand. It's got no complications in the way that it's laid out. It's a standard price, whether you're 18 years of age or 65 years of age. There's no preconditions as regards medical adjudication to be able to avail of the product. It's fairly low cost. It's there when you need it. It's peace of mind, and it resonates very, very well. We have a vast number of companies who've been with us for well over 10, 15, 20 years. We're going back to locations to service their employees with our insurance products again and again and again. If the product wasn't value for money and it wasn't easy to use and it wasn't valuable to them, we wouldn't have a chance of continuing to sell it, but that's not the case. So we're constantly going back to locations that we know are well known for the products that we provide. So we don't see that changing. We see that opportunity continuing to grow. And continuing to be part of what we do today. We have, of course, the augmentation now of our SaaS income, which lies on top of that or complements it. So with both, we have the opportunity to drive both businesses. Personal Group is a very sensible business. It's always been prudent in what it does. We are, of course, FCA APR regulated. We carry the risk for our insurance products. We design them, we sell them, we pay the claims, and we are obliged to carry the solvency capital. And when we look at this, at the dimensions of our business today, we're required to hold around about £4.5 million. And today we have over 16 million. So we've always had a multiple of the solvency requirement. It's held pretty much in cash. So it's always been our intention to have the ability to pay claims as they fall due, even if there was a stress test on that need. And over the years, we've held that cash, we've built a strong balance sheet, we carry no debt, so we always want to be in a position to be able to do that. So that's why we have the balance sheet that we have, and we take care of it. In addition to that, we have a progressive dividend policy. So if we don't need the cash, we return to our investors. And that's been a policy since the beginning of the business. We see no reason to change that. And we want to encourage investors to remain with us and to gain from what it is that we're doing. So well able to support the dividend. It allows us to invest as we have done over the last number of years. We've probably had some of the most significant investment in the business over the last 4 or 5 years than we had in the previous 10. So we're able to do that and respect our dividend and our progressive dividend policy. So for our outlook for 17 is that we remain pretty confident of our bottom line, and we're now planning into 18. So we've spent quite a bit of time getting the business into, I would call a digital state, which was quite a lot of effort and investment. We wanted to enter the 3 market segments of SME, large and public sector. We've managed to do that. Our platform is very, very tolerant of the market need, I would say ahead of the market need. So really, going forward, our challenge now is to go and sell in those market sectors, because we have the apparatus and we know where we want to point it. So for now, it's a question of growing the business, and that's on all fronts. That's our SaaS income, and that's also our insurance business in tandem.